Okay, I got that. Come out of small caps. As themes, what are you liking right now, Saurabh? We're having an interesting day where, there is a wait and watch on trade deal, consumer stocks are doing well. But frankly, the big theme right now is IPOs and the primary markets are buzzing. Is there anything interesting there that you see that is worth biting into from the perspective of our viewers? Or are you looking at all of this influx of paper with a hint of suspicion?
So IPOs and retail investors is not a particularly happy combination in any country, right? It's not just India. There's massive information asymmetry. The company has all the information. The company is using its information to issue shares at the top of a bull market, and the retail investor hardly has any information, right? So it's information asymmetry of a high sort, and I think the data is pretty clear. In this bull run, in the last 5 years, retail investors would have barely made money from, say, 1 in 5 IPOs. The long-term track record is even worse. At least in this bull run, retail investors would have made money from 1 in 5 IPOs. I think the 20, 30-year track record would be 1 in 20 IPOs, right? And that's pretty evident. That's exactly how it should be. Since the company is going public, they hold all the cards, they hold all the aces. The retail investor is someone who's relatively uninformed. From that perspective, if someone's insistent that I want to invest in the Indian market, then look at large cap quality. Large cap quality is at an awful 5 years. I know because I invest in large cap quality. Large cap quality is an awful 5 years. But as the economy is slowing down in our country, large cap quality is resurfacing, right? An example being HDFC Bank. So I must have spent many years on your programs justifying our investment in HDFC Bank. We hardly made any money on it through 2021, 22, 23. It's only in the last 12 months that our HDFC Bank investment has borne fruit. And that's exactly as you'd expect. As the economy slows down, investors are migrating from lower quality financials, lower quality banks towards the champion play in the sector. And this sort of phenomenon, I think, will carry on over the next couple of years. As the economy slows down, champion franchises, large cap quality will come to the fore. So if you want to invest in India, then focus on large cap quality. And I make it very clear that I have been invested pretty much all my life in large quality. So have my parents and so have our clients. That's the theme I think I can see working. It'll protect your capital. It'll also give you, I think, decent returns over the next 2-3 years.
That's an interesting strategy that you've given out right now in terms of the large cap space. A best investment bet right now in terms of India, and if you have to look at the broader markets, you're asking to go to global markets, and that's an interesting strategy that retail investors could have access to. But if you have to stick to India, you've spoken about large cap financials. How are you looking at the IT space as well, taking into consideration the exposure that they have to the global markets because you're positive on the global markets?
So fair point. So I think if the currency is going to depreciate, and I think the odds are the currency will depreciate, the IT space will benefit from that. Secondly, the phobia around what Trump will do, the concerns around geopolitics seem to be abating. That should be a signal for Western CXOs to sign off on their IT projects. I think we've heard from several years now. We've heard about the massive order books that our big Indian IT firms have had, but the execution of those order books has been lacking, has been pending. So now that the global uncertainties and the uncertainties around Trump are dissipating somewhat, I'd expect to see the CXOs of the Fortune 500 companies sign off on those massive order books that the Indian IT firms carry. So in our portfolios, both our large cap and our mid cap portfolios, we have pretty generous representation of IT stocks, and there should be a beneficiary both of the rupee devaluing and of Western CXOs hitting the capex button.
So IT you see as a beneficiary. What about defense? What about auto, pharma? How are you feeling about some of these spaces in light of everything that's happening geopolitically?
So the government has made it abundantly clear, right? The government has made it abundantly clear in our country that they will increase defense spending. The only question is, do we have large listed players that can benefit from the jack up in defense spending? That's where I get a little stuck, right? I can see a bunch of smaller companies who are suppliers to the Indian Armed Forces, and it's likely that the smaller companies will get bigger orders as the government increases its defense spend in light of the recent hostilities that took place with our neighbors to the north. But it's not clear to me that in large cap or even mid cap, there are large liquid defense plays at sensible valuations. My hunch is a big part of the defense outlay, a big part of the step up in defense outlay will end up going to American, French, and Israeli suppliers. Those are three big countries, I think, who are willing to supply cutting-edge arms and equipment to India. And therefore, I'm not so sure that the defense theme can be played through large liquid Indian plays. There are small, I stress again, there are small cap plays in defense, but there is a challenge around valuations, liquidity, and visibility of those companies' future earnings. So I would be circumspect on defense. IT, I think, is a good space to invest in. Large cap quality, large cap banks is a decent place to be in. But overall, I would be circumspect. In the FTA itself, I think auto exporters, Indian auto companies exporting into America should do well out of the FTA. The chemical sector, I think, should do well out of the FTA. Electronics exporters should do well out of the FTA. I think those are the sectors where we will get tariff breaks. We will get tariff cuts with respect to the United States, and potentially our comparative position improves vis-a-vis China in auto, electronics, and chemicals.
Saurabh, top 3 stocks that you would put your bets on right now if you have to play the India-US FTA play?
Good question. Those are, if you don't mind, I won't answer it directly because those are the stocks that my colleagues and our traders are working on over the next couple of days. But as I said, right, I gave you the spaces. I think chemicals. Within chemicals, our large cap investment or chemicals API, a large cap investment for many years has been Divi's Lab. It's been a big beneficiary of China Plus One. Divi's Lab has a bunch of suppliers, right? As Divi's Lab booms, its suppliers are also doing well. So look at the supply ecosystem that supplies to Divi's Lab. I think many of those suppliers will get lots of extra business on the back of the FTA coming through. On auto ancillary, specifically focus on auto ancillary. I'm not so sure the auto OEMs will benefit so much from the FTA. In auto OEMs, we've been long-standing investors in Eicher Motors. Hopefully, their exports into America will pick up a little bit more. Hopefully, the Harley-Davidson wala issue will be buried now, given that the FTA is signed. But amongst auto ancillaries, I think there will be a bunch of beneficiaries, companies who supply into Tesla and so on will do quite well out of it. Electronics, unfortunately, we have not been able to find any investments. Dixon's has clearly been an investment we missed out on, and potentially a firm like Dixon's could do well out of the FTA. I think the whole point of the FTA vis-a-vis electronics, auto and chemical/pharma will be to put India at a comparative advantage to China, and a firm like Dixon should benefit from that.
Okay.